Hi, everybody, and welcome to Chapter 22 in Intermediate Accounting. In this chapter, we're going to look at the statement of cash flows. Okay, after looking at this chapter, one, we're going to describe the usefulness and format of the statement of cash flows. Number two, prepare a statement of cash flows. Three, contrast the direct and indirect methods of calculating net cash flow from operating activities. Number four, discuss any special problems in preparing the statement of cash flows. And lastly, number five, explain the use of a worksheet in preparing the statement of cash flows. To some extent, you've already had this, some of this learning in your first financial accounting course. But here we're going to then preview Chapter 22 by looking at an overview of the statement of cash flow, looking at its usefulness, the classification of cash flows, the format of the statement, and then preparing the statement of cash flows. And we'll have an example of Evergreen Incorporated. And then we'll look at the sources for the information on the statement of cash flows and maybe some additional adjustments we need to make. From looking at the net cash flow from operating activities direct method, we're going to look at implementing the direct method. I would argue much more difficult than the indirect method, but we'll take a look at the summary of that as well. Special problems in the statement preparation. We'll have adjustments to net income, accounts receivable, of course, net accounts receivable, other working capital changes, some net losses, and finally, significant non-cash transactions and how those are handled. And then when we look at using a worksheet, how we use it to prepare a worksheet, analyzing transactions, and finally preparing the final statement. Okay, let's get into the meat of the chapter. Let's describe the usefulness and format of the statement of cash flows. Its primary purpose here is to provide information about the company's cash receipts and cash payments during a period. The secondary objective is to provide cash basis information about the company's operating, investing, and financing activities. We're going to look at how we use the statement of cash flows here in providing information that helps us assess, one, the entity's ability to generate future cash flows. Number two, the entity's ability to pay dividends and meet obligations. Number three, the reasons for any differences between net income and net cash flow from operating activities. And number four, the investing and financing transactions during the period. So if we look at an illustration here, our operating activities, that involves income statement items, and I like to say current assets and current liabilities. Here we have cash flows from our normal operating activities, which include sales of goods and service, interest revenue from any notes receivable that we might have, dividends from equity investments, but we also, of course, have cash outflows to suppliers for inventory and other items, employees for their services, the government always wants their taxes, lenders for interest expense, and other expenses. Now, investing activities, these involve changes from long-term assets. And here we could have cash inflows from the sale of property, plant, and equipment, the sale of debt or equity investments, or a collection of principal on loans to other entities. That would be notes receivable. Cash outflows would be the sales of, or I should say cash outflows to use to purchase property, plant, and equipment, purchase debt or equity investments, and maybe to make loans to other entities, a note receivable. And then our third classification, financing activities, and this involves long-term liabilities as well as stockholders' equity items. And our cash inflows would occur from the sale of common or preferred stock and the issue of debt, bonds, or notes. And then our cash outflows to stockholders as dividends, maybe to lenders to pay off long-term debt, and stockholders to repurchase treasury stock. Okay, that gives you a good view of how cash would come in and out of a corporation. So, operating activities. The operating activities category or classification is the most important. It shows the cash provided by companies' operations. It is important to emphasize that items reported in the operating activities are those that enter into the determination of net income. So, here we're going to take a look at classifying these cash flows and cash equivalents. The basis recommended by the FASB for the statement of cash flows is actually cash and cash equivalents. Cash equivalents here are short-term, highly liquid investments that are both, one, readily convertible to known amounts of cash, and two, so near their maturity that they present insignificant risk of changes in interest rate. So generally, only investments with original maturities of 3 months or less qualify under this definition. I, for one, have never done these short-term investments for more than a month. I always want to be sure I can lay my hands on that precious cash if I need it. Okay, so the format of the statement of cash flows are going to be presented as follows. One, we'll have our operating activities, and we can prepare that using the direct or indirect method. Number two, investing activities. And number three, financing activities. And the report inflows and outflows from investing and financing activities separately. Okay, here is an illustration, which I might add is largely used almost exactly like it appears here. We'll start with cash flows from operating activities. Here they start with net income. They make adjustments to reconcile net income to net cash provided or used by operating activities here. And then in this case, we would have net cash provided or used by operating activities. Then we would have investing activities, net cash, and we would have financing activities, net cash. We would add these three together to get the net increase or decrease in cash. And so we would add that to the beginning cash, and that would give us cash at the end of the period, which should tie to the balance sheet. All right. Here, the Gomez Corporation is preparing its 2025 statement of cash flows. The following are some of the cash activities that occurred during the year. We purchased inventory, paid employees, paid dividends, received interest revenue, sold goods to customers, paid utilities, purchased a new delivery truck, and purchased stock of another company. So how would we classify those? Purchasing inventory, operating activity. Paying employees, operating activity. Paying dividends to stockholders, financing activity. Receiving interest from an investment, that's going to be operating activity. Selling goods to customers, Operating activities, paying our utilities, operating activities. Purchasing a new delivery truck will be an investing activity, a long-term asset. And number 8, investing activity for purchasing stock of another company. Okay, let's look at preparing a statement of cash flows. Here, we need 3 sources of information to do that. 1, comparative balance sheets. 2, current income statement data. 3, selected transaction data. So 1 here, we determine the change in cash. A company can easily compute the difference between beginning and ending cash balance from examining its comparative balance sheets. Number 2, determine the net cash flow from operating activities. This procedure is more complex and involves analyzing the current year's income statement, current assets, and current liabilities on comparative balance sheets, as well as finding some selected transaction data. And finally, number 3, will determine the net cash flows from investing and financing activities. A company must analyze all other changes in the balance sheet accounts to determine their effect on cash. Okay, here's an illustration from Evergreen. Evergreen started on January 1, 2024, when it issued 60,000 shares of $1 par value common stock for $60,000 cash. The company rented its office space, furniture, and equipment and performed sustainability consulting services throughout the first year. The comparative balance sheets at the beginning and end of year 2024 appear on the following slide. The next slide also shows the income statement and additional information for Evergreen. So here is their comparative balance sheets. And of course, we started at the beginning of 2024, so there was no balances at that time. And here are the balances that currently exist at the end of the year. So it shows our increases in all cases. Okay, now if I look at the income statement, I start with revenues. I subtract out operating expenses. I get income before income tax. I got income tax expense, finally net income. An examination of the data indicates that a dividend of $14,000 was declared and paid during the year. Okay, so if we're going to determine the change in cash and the net cash flow from operating activities, the first step is to determine the change in cash. To prepare a statement of cash flows, the first step is to determine the change in cash. This is a simple computation. Evergreen had no cash on hand at the beginning of the year. It had $49,000 on hand at the end of the year. Cash changed, in this case increased, in 2024 by $49,000. In step 2, we're going to determine the net cash flow from operating activities. And to do that, we'll determine the company's adjust net income in numerous ways. A useful starting point is to understand why net income must be converted to net cash provided by operating activities. Under GAAP, most companies use the accrual basis of accounting. This basis requires that companies record revenues when a performance obligation is satisfied and record expenses when incurred, as you all would know. For example, revenues may include credit sales for which the company has not yet paid or collected its cash, and expenses incurred. And that may include some items for which the company has not paid in cash. Thus, under the accrual basis of accounting, net income is not the same as net cash flow from operating activities. That looks like a good place for us to stop this video. And when we return, we'll take a look at completing this cash flow from operating activities. Until that time, bye for now.